Hooty hoo, all my stock market gamblers. Welcome today. It's Friday. We made it to the end of the week. It's May 7th. Well, today we had an interesting, the jobs number came out, the non-farm payroll number. So what happened? Well, it increased by 266,000. Okay. Now, they expected a million. 1 million? We got 266,000. They missed this number just astronomically. I mean, this is a huge miss. Now, they say that unemployment actually went up for, the week. We're at 6%. We're just over 6%. Now, me and you, I think we know that the real unemployment number is probably closer to 20%. But what does this do? So they expected 1 million jobs. We got 266,000. Well, what does this do to the stock market? Sends it flying higher, much, much higher. Why? Well, we know. Well, here's what we know. The Fed is going to have to put more money in to stimulate the economy. So we're going to print more money. We're going to create more debt to stimulate the economy. Look, they don't care about the economy. They don't care about me and you. What they do care about is getting that stock market up higher. They don't want to see it come down. So the more bad news we get, the higher the market's going to go, because the market is not real. It is fake. The only thing that is driving the stock market is the creation of money. Now, what I want to talk today about is how this creation of money has created what are known as zombie companies. And what's a zombie company? A zombie company is a company that cannot even service its debt with its cash flow. Okay, so in other words, they're not making any money to pay off their debt. So what do they do to stay in business? Well, they go to the Fed and they borrow more money. Now, they borrow this money at 1%. Okay, so the companies aren't making money and they have to borrow money just to stay alive. Otherwise, the companies would go out of business. Now, in the S&P 500, about 100 companies are what is known as zombie companies. In other words, the only way they're staying alive is to borrow more money from the Federal Reserve at 1% approximately, and we have 20% of the companies doing this. Now, to give you a perspective, back in 1990, we had about 10, total of 10 companies that were zombie companies out of the 500 in the S&P 500. So roughly at 2%. Now, what were interest rates back in 1990? Well, they were about 10%. About 10%. Okay, so interest rates were 10% and we had 10 companies. Now interest rates are 1%. And we got 100 companies in the S&P 500 that are zombie companies. Now, at what point, what if every company was a zombie company? What if no companies made money? What if the company's sole purpose was to borrow money from the Fed to buy their stock back to make it go higher? What if that was the only purpose? Would this be a good thing or a bad thing? Would the stock market keep going up and up and up? For a while, but eventually, zombies are going to crash the market. They're going to bring the market down. Companies, they're not making money right now. Now, that's fascinating because they don't need to make money right now. Do you know that 70% of companies that are going public right now, they do not make money? Now, let's talk about this a little bit. They're companies, and some of these are good companies. I use these companies. Company like DoorDash, for example, the one that can bring food right to your door. They lose billions and billions of dollars. Now, a company like Uber, I like getting food delivered to my door. Uber now delivers the food also to your door. But Uber, they're like the taxi replacement, but they lose billions and billions of dollars. They lose about $1 billion a month. Now, it's just crazy. But what does that do? Well, it makes investors want to put more money in because they know they can borrow this money at 1% and put it into this big black hole and lose money. Now, at some point, I'm an economist, and it's embarrassing even saying I'm an economist today. Once again, they expected 1 million new jobs. They got 266,000. Economists cannot agree on anything. They cannot agree if there's going to be inflation or deflation. Economists, they just don't agree on stuff because all economists are different. We all have different views. Now, I have the view that the economy is a disaster. It's a complete and total disaster. That's my view. But my view is that the stock market will go up higher from this. Why? Because the disaster of the economy gives the Fed the green light to print as much money as they can, which is really just confiscating your money in your wallet because that money becomes worthless the more the Fed prints. Okay, so they have the green light to steal all of your money, all of my money, and just throw it into this black hole of these zombie companies. Okay, and they're going to continue to do that as long as the economy is a total train wreck. Until the market starts to go, hey, we're not buying this anymore. We're not just going to continue to believe this, and the market's not just going to continue to go up, and it will actually have a very, very hard crash. But not yet. Once again, do not bet against the upward trend in the market. Do not bet against the Fed printing money. As long as we know that the Fed is there to print unlimited amounts of money. I'm talking about 10, 20 trillion dollars. They can do it every month. There's going to be this big crack up boom in this debt bubble is just going to get larger and larger and larger and larger. Now, eventually, that bubble's going to pop. All bubbles pop. No nation has ever been able to print their way to prosperity. It's just not possible. Now, I know you're saying the United States is different, Mike. You don't know. We got the reserve currency. We're the reserve currency for the world. Well, maybe we are, and maybe that continues on. Maybe that changes. I don't know what it will change to. Maybe Bitcoin takes over. Maybe gold takes over. Maybe the yuan takes over. Maybe China comes in and buys the whole U.S. It's going to be on sale soon. We're going to have to sell everything to create money to get our way out of this mess that we're in. And we're in a mess. I mean, we got 28 trillion in debt. We got, really 100 trillion in additional liabilities like Social Security and Medicare. So we have a big problem in the U.S. and we think we can print our way out of it. We think we can get out of debt by printing more debt. Now, some economists believe that's true. Some believe that's true. Some believe the more money they print, the higher the dollar is going to go, and we're just going to get our way out of this. I disagree with those. I really do. So what's going to bring the stock market down? When is the dip actually going to dip? Now, I do think it's coming soon, very soon. I do believe it's coming soon. I do believe this is going to change. But right now, do not bet against the upward trend. Do not short the market. And the Fed's going to continue their printing of money. Okay. So how do we protect ourselves from this? How do we protect ourselves? I'm telling you, I like gold and silver. They're exploding higher. It's exploding higher. They're going higher. They're going to go much higher. Much higher. I mean, a lot of calls are now for gold at 50,000 an ounce, below 2,000 an ounce. But hey, all you Bitcoiners, don't, stay with Bitcoin. It's at 57,000. It's already at 50,000, 57,000. What if gold did get to 50,000? What if that did happen? Well, there's a ratio between the Dow Jones Industrial Average and gold. And right now that ratio is running about, let's call it 20 to 1. 17 and change for gold and 34,000 for the Dow, 20 to 1. Okay. At some point, that's going to be 1 to 1. Now, will they meet at 50,000 or will they meet at 5,000? I don't know, but that's a big 20 to 1, 20 times on your money. Gold at some point will go 1 to 1 with the Dow. Did it in 1980? Did it in around 1930? It went 1 to 1 with the Dow Jones. Okay, so do you want your money in the stock market or do you want your money in gold? I want my money in gold right now. I'm buying the gold miners. Well, I'm buying call options, and those are exploding higher, up over 200% just in the last couple of weeks on those options. That's a nice little trade, right? At 200%. Now, maybe you wait for a pullback to get into these because they've had a great run. They've had a great run, and they could easily pull back. I hope they do. I want to buy more of them. But you got to protect yourself from this confiscation of money. You got to protect yourself from the stock market when the crash does happen. And these zombie companies are going to bring this market down. This is all my opinion, and my opinion only. I am a gambler. I'm a stock market gambler, and this is what I think the future is going to bring. I think that it will be a dip, and I think this dip maybe is the one to still keep buying. Buy the dip. But eventually the big crash will come, and a lot of people will get hurt when it happens. It's not here yet. Market's still going up. So anyways, that's all I got for you today. It's Friday. Get out there. Have a great weekend. If you like this stuff, give me the thumbs up. You really like it, hit that subscribe button so we can talk again next week. I don't have a lot of subscribers, so I need you guys. I like talking to you. Hopefully I'm valuable to you. Hopefully you find this resource, the content I produce, interesting, if not good and helpful. I'm Tall Mike. Get out there. Have a great weekend, and we'll talk again next week. Bye-bye now.